Hello and welcome to the last Targets in Focus for this trading week. Manuel Oliveri FX Strategist at Credit Agricole joins me on the line now. Manuel, the US dollar continued to trade lower against the Japanese yen, and in Asian trading on Friday, the US dollar yen dropped 0.19% to 96.82. With this in mind, what are your forecasts for dollar yen?
But generally, first of all, in order to go into this, the pair has been actually pressured by several factors of late. Actually, not only yesterday, over the last few days. And first of all, the global risk sentiment has been deteriorating, partly due to falling liquidity expectations. This is due to rising uncertainty, for example, about the Fed's monetary policy stance. But also, and this was maybe a big driver yesterday, also as the ECB, the European Central Bank, actually failed to support dovish expectations among investors yesterday. This is mainly reflected in the fact that Draghi, ECB President Draghi, stressed that he's actually quite confident with tighter liquidity conditions in the Eurozone. And if you look at excess liquidity, it actually decreased quite a lot over the last few weeks. And he regards these tighter liquidity conditions as a result of improving conditions in the banking sector. But such a stance is obviously not taken well by risk assets, for example, equities in the current environment, because in the current environment we have quite weak global growth expectations, and this means actually that risk assets such as equities are more or less supported by liquidity conditions. And if there is expectations arising that liquidity is going to become tighter even more, then risk assets are starting to deteriorate. And this is one factor what is actually driving the yen higher based on risk aversion. The other thing is that obviously as of late US macro data failed to surprise positively. You had weak manufacturing activity data out, employment components of the last ISMs have actually disappointed, and this actually has increased some doubts among investors if the Fed is indeed ready to start to taper quantitative easing anytime soon, and this has triggered a correction lower in US yields. So in conclusion, weak sentiment, also as triggered by yesterday's ECB announcement. This was a short-term trigger in combination with lower correcting US Treasury yields, have been driving dollar yen lower of late. Last but not least, and this also has to be taken into consideration now, there is some uncertainty if the BOJ can seriously deliver in terms of reaching the inflation target, and if they will actually ultimately succeed in stabilizing the bond market. We basically believe that there is more scope for the BOJ to do more. At the same time, we also believe that in the medium-term conditions in the US will actually continue to improve. So we do not share investors' nervousness right now based on the most recent weaker than expected data. We think actually that the US will continue to improve gradually. And we also believe that the BOJ can ultimately go further into the direction of reaching the inflation target. There are some indications in the market. You can look at break-even inflation rates, for example. They have increased a lot over the last few months, but there is more scope for them to rise further. Should the BOJ actually become even more aggressive. This cannot be excluded. There will be a lot of focus on next week's BOJ meeting, and it remains to be seen what happens then. But as said, we believe that the dollar yen downside is corrective right now, and that the pair will ultimately move higher once again. And by end of the year, we do not exclude that we see levels closer to 110 once again. Also based on the view that risk sentiment should stabilize once again, because the Fed, if you focus on the Fed is unlikely to taper quantitative easing without further improving growth prospects. And under such conditions, further improving growth prospects would ultimately compensate for falling liquidity expectations. And this would be something what would in the end also keep risk sentiment stable. So our view, risk sentiment to stabilize again, US to continue to improve, US yields to be supported based on this factor, and at the same time more scope for the BOJ to start stabilizing the bond market once again, and this will ultimately make the most recent dollar yen downside rather a correction than a change in trend.
Elsewhere, the euro yen fell by 0.38%, even after the European Central Bank left its benchmark interest rate unchanged at 0.5% and left deposit rates at 0. Based on this, what are your perceptions for the euro yen?
Well, some some investors have been surprised. On one side, euro-dollar has actually corrected higher, has been moving higher quite a lot yesterday, but euro-yen actually fell, as you say. But one has to consider one thing. Euro-yen is not really, in this environment, not really driven by the euro angle. It's very strongly driven by the yen angle, because since end of last year, based on the BOJ's monetary policy stance, there was a lot of positioning on the yen side. And many investors have actually also not only started to buy dollar yen, they also have started to buy euro yen, based on the view that the yen is depreciating, right? And this made actually euro yen, the cross, much more sensitive to risk sentiment as compared to the to monetary policy expectations when it comes to the ECB or the ECB's monetary policy stance in general. So euro yen fell based on unstable risk sentiment. This is the key takeaway for yesterday. What we think about the euro yen going forward, okay, as said above, we think that the yen will start stabilizing again, that the most recent yen upside is rather corrective, but we don't think that there is much more downside potential for euro yen based on our less constructive view about the euro going forward, because based on our negative yen view, euro yen should actually stabilize once again going forward. At the same time, there is not much upside, because we do not think actually that there is much more potential for ECB monetary policy expectations to drive the euro higher from these levels. This is very important. So we would expect euro yen to stabilize around these levels and to be range bound over the next few weeks.
And finally, Manuel, what do you see happening to the pound yen in the short, mid and long term?
Well, first of all, sterling, we are actually quite constructive on sterling, because there are different reasons for that. First of all, our of late growth expectations have been improving consistently, actually, with respect to the UK. In our view, there is actually more scope for improving domestic conditions in the UK going forward. And at the same time, and this is something what one has to consider, at the same time inflation expectations remain quite elevated when looking at the UK. If you look at the forward break-even rate, for example, you see that inflation expectations are well too high for the Bank of England to become once again more dovish on monetary policy. This is very important, because we think that there is no scope for the Bank of England to become more aggressive anytime soon once again. At the same time, you have extreme speculative short positioning in the sterling still, and the combination of these both factors makes actually scope for additional positions growing to the benefit of the currency. So we think that growth expectations will continue to improve, that this will continue to keep inflation expectations stable, and this will continue to diminish any chance for any policy action by the Bank of England anytime soon, and this will actually benefit the currency in an environment of quite aggressive short positioning. This is the sterling side. On the yen side, as said, based on the factors from before, we think that the yen is stabilizing once again, that the recent upside was corrective. We think that there is renewed scope for downside, and this will ultimately also make sterling yen a buy once again in our view.
Manuel, thank you very much for your perspective today. And we will have plenty more from Targets in Focus next week, so do join us then. But for now, it's goodbye.